Hello. Hello, hello, hello.
Where everybody was selling, 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 and all of a sudden, go.
Okay. So we're waiting for Keith and then we will get started. We're like 2 minutes early, so let's wait for guys to join in. Hello. Hello.
Hello, Sylvia.
Hi, how are you?
Good. How are you?
I'm good as well. Want to make you host because at some point you'll share your screen.
Okay.
Yeah, and then for today we're just gonna do a pre-recorded webinar because most guys were not available to join. So it's just gonna be me and you most of the time. So
Okay.
yeah. How have you been though?
Uh, busy.
Okay.
Busy. The markets are pretty wild
Mm,
and lots of variables out there. So it's a full-time job,
yeah.
even with the automated stuff to just stay on top of everything. So
Okay. But you've been well?
yes, yes,
All right. I had a session with Michelle last week.
yes, I know.
It's good to have you back on the trading lounge.
Thank you.
I'm just gonna remind people about your trading experience in a little bit, and then we can get right into. How do you want us to do this? We will basically go through your most recent trades, and then you will show us like your trading rationale and stuff like that. And then I'll see if there will be questions from the community that they will have sent. We will address them, but if not, we will just go through your most recent trade setups.
Okay.
Yeah. So, meanwhile, let me just go through your bio. I'm gonna summarize it because it's pretty long.
Yes. Well, I've been around a while.
Yeah, yeah. So Keith has over 40 years of experience in the financial markets. He started out as an independent floor trader in 1977, where he was on the floor of the major New York futures exchanges. Then in the 80s, he started Market Vision Corp, a company specializing in supplying the state-of-the-art workstations to major financial institutions. And then in 1994, he began managing money for Millennium Partners, which is a New York-based hedge fund. And then from the time on his trading floor to moving upstairs into the hedge fund world, he was able to witness firsthand the changing nature of the financial markets and trends towards increased computer automation and globalization. With his unique perspective and trading style, Keith went on to found MarketGauge.com, which is a provider of financial information to thousands of individual investors and traders, as well as large financial institutions and publications such as Barron's, Fidelity, Thomson Reuters, and Bank of America. He's now the founder and CEO of MarketGauge.com. For nearly 20 years, he's been developing and improving his trading products, services, strategies, and systems, while also serving as a trader mentor for MarketGauge customers. He produces a weekly editorial content with market analysis called Market Outlook. Um, He's also a FINRA Series 65 registered investment advisor representative, and he serves as investment advisor and CEO of Market Gauge Asset Management Limited Liability Company. He has a BA from the New York University. So, Keith, it's truly an honor to have you back on the lounge. Maybe you can just tell us what you've been looking at in terms of the recent market trends, what you've been trading, which asset classes you're specializing in, and then we can get right into your presentation.
Well, basically, what I've really worked on is not discretionary trading, but algorithmic trading models, and then creating various trading blends depending on the appetite for risk. So I happen to like our what we call our growth fund. We also have something that's even more aggressive, but really for myself and for most of our clients, we sort of have a blend of different strategies. that basically use different market edges. And so right now, the core philosophy is lots of concentration, not a huge amount of different holdings. And so our stock holdings have, like, for instance, in the NASDAQ, been in the top 5 or 6 stocks based on our ranking system. And that ranking system has put us into Seagate, Micron, Western Digital, Marvel, and ARM currently. So we have, interestingly enough, only about 50% because we've scaled out of a lot of our holdings in this, taking profits and then tightening up the stop. So currently, our risk levels in our trading models are, especially in the individual stocks, are relatively low. So, considering where we are and the potential volatility in terms of, just what's happening geopolitically. And also, it's interesting, on yesterday, we got some interesting news regarding Alphabet. It got hit pretty hard. And, it's possible we can certainly have a correction here. Obviously, semiconductors driving the AI craze is really very, very strong and potentially overbought.
All right. So at this point, I think you could share your screen and then you can take us through your most recent trade setups.
Okay. Let's see here. Share. Can you see my screen?
Yeah.
Okay. So this is directly from our website, marketgauge.com. And this is where we have our trading models. And in essence, you can see what the open positions are and some of the closed ones and what we've done and how we've actually managed the risk. So again, the key concept of this trading model and this particular edge is all about concentration in the top ranked stocks and then managing the risk. So it's sort of like tactical, well, it is tactical asset management with the core philosophy similar to, Warren Buffett, in the fact that the trades and the positions are very concentrated. But we're pretty confident about our TSI ranking, which is, if you can see here, let me actually get my pen here. Hold on. Can't find my pen. Host tools. Let's see here. 1 second.
Okay.
Well, can you see my cursor here?
Yeah.
Okay, so I'll just use the cursor. So you can see here our TSI ranking. This is our trend strength ranking, and it's a proprietary way to look at pure price action and look at it over multiple time periods and see how it's doing, and it gets a ranking. So you can see here that we've got Micron, ScanDisk, Marvel, Intel, ARM, Western Digital, Seagate, AMD, AMAT. All of these are chip AI stocks, semiconductors. It's all tech. And you can see, depending on when we entered, right now, we're currently still in Micron. One thing you can see, we have 2 times of the month that we enter. And there are good reasons for that. A lot of it has to do with reinvesting retirement funds at different times, and that definitely has a big impact on the stock market and these trading models. So we have detected that there are 2 times of the month, one early in the month and one mid-month, where we rebalance. So you can see our longest holdings right now, our oldest one, goes back into our mid-month model, where we've been holding this for the last 6 months or so, right? We got in, as you can see, on January 15th at 345. It's currently at 1200, not including what's going to happen, obviously, this morning in the opening in about 20 minutes. And you can see our current stop is at 800. We only have 25% of the position on, and our return on this trade so far in aggregate is up 86% or so. And we've been in the trade 160 days. And right, we only have 100 in, we only have 25% on. And you can see we've hit 3 targets. The last one was at 863, and now we have a core position of 25% on in this particular stock. And so right now, very, very concentrated with some pretty tight risk management. Now, what's interesting, one thing you can see is in Micron, in the early version, we actually have no position. We've taken off everything. And at the moment, the same thing in Western Digital. You can see we've got nothing on here. So our positions right now are relatively light, even though we've done really well year to date. We're up in this particular system 95% year to date. Now, I'm talking, not as a investment advisor here. I'm talking as someone who is CEO of MarketGauge.com. We don't manage accounts in this particular business. This is our financial publishing side. But, we use various blends of all of our trading models. But this is particularly interesting because this is an individual stock model that basically rotates twice a month and has risk management. So you can take basically 3 targets on the way up and then have a core position that has a trailing stop to it as well. So right now, the trailing stop in MU is 800, and it's well over a double from where we entered in mid-January.
So would you consider yourself a position trader because you've held a trade for over 160 days?
No, I would consider myself opportunistic. If in fact the situation changes and we get stopped out, it could happen very quickly, especially in trades that don't work. So, with what's happened, certainly, with semiconductors and the whole AI craze here, we've got a situation where our holdings have stayed in the top position for a good length of time. So I would say in this particular model and most of our models, we're opportunistic and more of an intermediate term trader, because it could vary depending on the market conditions. We believe in letting the market tell us what to do. So right now, as you can see, like we entered Marvel and ARM in June 12th of this year. And again, we have stops in them, and we will exit if things get dicey, and we let the market dictate. So sometimes it's shorter term. Generally speaking, with the way we manage things, if the market's volatile and selling off, the holdings are going to look short term and will be out, or certainly reducing positions. Does that make sense?
Yeah, well understood. Understood. Maybe you can take us through like a chart live example of your trades.
Okay. Let's see here. So, is there any particular trade in here that you want us to look at?
Not anyone in particular, but maybe we
Okay.
can touch a little bit on Nasdaq stocks if you have a sample of Nasdaq stocks.
Well, these are all NASDAQ stocks here.
Yeah.
So one thing you can look at, actually here, you can see these are all, and again, everything here is algo driven. There's no discretion on our part. So you can see we entered Seagate here, right, on April 7th. The entry price was 448. We exited, believe it or not, like 3 weeks later, 25% of the position at 667 for a 50% return. That's our first target. Our second target, right, we hit in May 26th, right, almost 3 weeks ago, and we sold that at 860. So in essence here, on the second target, it was just about a double. And, over here, it was up about 40% from the entry price. And as you can see in Seagate up here, we still have half the position on. And our current stop locks in a profit at not quite double, but essentially, moving up a trailing stop.
Mm-hmm.
So that is complete algorithmic trade. And I believe, let's see, today is the 23rd. Yeah, so we're not going to be moving anything until the first week of July. So that's this particular model here. Did you wanted me to look at a chart?
Yeah.
Okay, hold on. Uh, let me see what to do here in terms of a chart. Um, let's see. I'm going to have to go into a different app.
No
Uh,
worries.
okay. So this is not live. You're recording, correct?
It's pre-recorded.
It's pre-recorded. So
Yeah.
will you be able to edit this?
Yeah, we can edit and then upload it on YouTube after we're done.
Okay, so hang on. Let me get into my trading app here.
Which trading app do you normally use?
Well, we have our own that we just actually are in the process of releasing.
Okay.
So I thought maybe I would do that, use that.
Mm-hmm.
So hang on here. I'm looking for it.
Take your time.
Okay. Hmm. I have to go find it now. Uh, hmm. Well, this is so new that no, not working. All right, so what I'm going to do is go into Team Viewer, and I will share that. Hang on. Sorry, I thought I was going to just go through some of the uh, hang on. For some reason this is not working right.
Mhm. Have you at some point used TradingView before?
Yes. Let me try a different. Okay. All right. So this is using TradeStation here. Ah, some reason it just logged me off. So I apologize for this.
No
I was
worries.
not set up to do, I didn't know that I was going to be doing charts today. Okay. Okay. Can you see this now?
Yeah.
Okay. So one thing, I mean, I can go through some of the process. What's interesting, I'm looking at a weekly chart on Bitcoin. So if I go through the analysis on Bitcoin, one thing you can see here is the 200-week moving average has been respected since going back to really 2023. And recently, back in early February, we sort of had a test of it. We had a big rally from basically around 60,000 or so to almost 82,000 or just above 82. And now we are hanging on to it. And if this breaks, one of the things that you could see here, you've got this sort of pattern that looks like a slightly distorted head and shoulders top. And in essence, you know, we could end up going down to 40,000 if we break the current levels. Now, we also have a proprietary momentum indicator, which is called real motion. And what we do with real motion, we look at the momentum of a stock relative to a moving average. And so right now you can see the momentum is clearly under both the 200-week moving average, right? The green is the 200, the blue is the 50, and currently we're extremely weak here. So this is not really a good sign overall, where price momentum is diverging from the actual momentum of the stock, right? So this is momentum. This is the price. Momentum, you can see here, has been really failing since the highs that were put in October of last year. You can see we started failing the 50-week moving average, which basically occurred around 107 to 110. And it has not really improved very much at all. And so we did have a bit of a rally off the lows, testing it again. It'll be interesting to see how this plays out. But overall, we are not in good shape regarding Bitcoin at the moment. So I thought that would be interesting to cover.
Yeah, that was a very good example. At least we've understood more about how you normally conduct your trades, basically your trading rationale. Um, could you touch a little bit on risk management and also stop losses?
Well, again, what we do is before I enter any trade, whether it's in an algorithmic trading model or a discretionary trade, the algorithmic trading models, everything that we do is risk managed from the start. We don't let the market influence us. Before we're in the trade, we make an analysis of how far we have to risk in order to be wrong. Right? So that is, and then what we try to do is scale out of the trade and move up the stops as you're taking profits as well. So for instance, had we bought basically somewhere around the 60 level, or even, let's say we waited for the bounce and then sort of bought it when things stabilized, I would have put my stop in on a closing basis for the week under this 200-week moving average. And right now, we're sort of flirting with that at the moment. Of course, it's early, so it's it's making it interesting. It could fall quite a bit further as well. But if it closes under this week, I would be really concerned. And certainly, if it closes under the low of what we just saw in early June here. Right. I like to look at a convergence of an indicator plus price at a key level. So right now, we're looking at 57,000. Let's see, that that occurred about a month ago or so. So again, this is a weekly chart. Now, if I go and all these charts here, let's see here. So now if we look at the daily chart, one thing you can also see is that the momentum here, the 50 is under the 200, which is confirming what's happening here in Bitcoin on the daily charts. So right now, if we take out the recent lows on an intraday basis on the daily charts and close under this 58,000 level, I'd be really concerned. And there's a good chance with the projections that we just did on the weekly charts, it could end up finding support around 40,000. And if you take a look, what's also interesting is this whole pattern from 2024, all of 2025, and now halfway into 2026, the big picture is it looks like a potential extended head and shoulders top pattern.
Mm-hmm.
So it's interesting here. In fact, you could even say that the pattern here from October of 2024 till February of this year was also a shorter term head and shoulders pattern. So, in essence, if you take the count from 80,000 to 120,000, that is basically 40,000. And again, that would also confirm what I said earlier, that the support should be found if the market does break down, would be down to the 40,000 level if we do break down. Otherwise, this whole area could be considered a support zone, assuming that we do hold that $58,000 level.
All right, understood. So at this point, I don't know if there's anybody with a question because we have about 5 minutes on the clock. I would like to thank you, Keith, for a very in-depth analysis of how you normally conduct your analysis, basically. And also the fact that you're very big on automation is also something that is trendy for modern day traders to possibly consider looking into. Because with automation, you do away with emotions and anything that may deter your trading, basically, when it comes to the human element of trading. So that's really commendable, given your years of trading experience. We would, of course, love to host you again in the future. And so now I would welcome any questions from the attendees, if there's any. If there isn't, we can wrap it up over here, unless there's something you wanted to stress upon that we haven't really covered during the webinar.
Well, I think one thing in terms of, let's take a look just at the S&P. Hang on here. So we look at the broadest based, highest capitalization. One thing you can see here is we definitely, right, across the board in a bull trend. I would be concerned if we take out, remember I said, the magenta here, that line is the 10-week moving average. So it's a shorter term moving average. Right now, we're above the 50-week and the 200. Everything is sort of stacked and slow positive. And if you look at our momentum, it's also above that 50-week moving average as well. You can see we ended up getting a little bit overbought at the beginning of June and late May. But here's what I would say. If, in fact, we take out the 720 level, which is the low from a couple of weeks ago, that would be concerning to me. When you take out an important moving average and a price point, that convergence is an important level. So right now you can see we're down 1.5% on the day, which is fairly substantial. But again, we really haven't taken out that important low, which would confirm this breakdown of the short-term moving average on the weekly charts. So right now it's looking a little bit dicey, but it really hasn't confirmed an important breakdown. And of course, the U.S. equity market, the S&P, is often considered the best global benchmark for equities in general.
All right, so that's all the time we had. Thank you so much, Keith. We will have this uploaded on YouTube, and then I will share the recording with you as well. Would love to host you again in the future. And for now, it's a goodbye.